we are going to hit record in three, two. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. This podcast is for the entrepreneur out there looking to just learn a little bit about history, and maybe what you learn you can use to your benefit. And I think you will with this podcast episode. The book we're talking about is called Hall of Mirrors: The Great Depression, the Great Recession, and the Uses and Misuses of History. And it's an honor to have Barry Eichengreen with us today. Thank you so much for being here, sir.
Mike, good to be with you.
Well, let's start off with the genesis of this book. What made you want to bring all these stories to life? I guess you have a background in this world, and maybe there was something you learned along the way, but what made you want to write this book?
Well, I had been a scholar, first a student and then a scholar of the Great Depression of the 1930s for a long time. And I'd always told my students that we had learned lessons from the Great Depression
Mm-hmm.
uh, that would prevent such a thing from ever happening again. And then we had the subprime crisis and the global financial crisis in 2007, 2008. And many people thought we were again on the verge of a second Great Depression. So that forced me to go back and mark my views to market, if you will. Had we really learned the right lessons from the Great Depression? Did we really know how to prevent the same thing from happening again? How did we get into that mess in 2007, 2008 in the first place?
Wow. And yes, a lot of people were wiped out. But then again, I've interviewed many millionaires, and when people were running away from the fire, they were running in, and they scooped up all that real estate for pennies on the dollar. So where there's chaos, there's opportunities, what I've learned from interviewing some really successful people. But let's go back to 1929, the stock market crash. The only thing I can think of what caused it is just the loss of belief in institutions, right? And so there was a bubble. People, the roaring 20s was happening. There was a lot of buying, and then all of a sudden 1929 happens, and then people stop buying as much, and all of a sudden you start to see the decline in the belief of certain institutions, causing the stock market crash, leading to the Great Depression. So what really caused that? I don't know too much about it.
Well, there was a lot of frothiness in financial markets that looked a lot like a bubble. You know, a bubble is, we know it when we see it, but we can't really define it. But just like in the run up to 2007, 2008, there was a high tech boom
Mm-hmm.
in the 1920s. It wasn't the internet, it was radio. So the go-go stock of the 1920s was RCA, Radio
Wow.
Corporation of America. That counted for a significant fraction of the run-up in stock prices. And secondly, there was a real estate bubble, just like there was in the run-up to 2007, 2008. It was in Florida, where some shady entrepreneurs were selling swampland to snowbirds from the north to build homes. And you had um, a boom in the Midwest in Chicago and Detroit, where the first suburbs were being built. Um, the skyscrapers in Empire State Building was built at the end of the 1920s.
Mm.
They finished it actually in the early 1930s. So the bubble and the excessive exuberance, to steal a phrase from Alan Greenspan, came from real estate and high tech. What um, caused it to burst in 1929? We can't really say what the catalytic factor was, but one thing that contributed to it was the Fed was worried about the boom and whether that would lead to financial difficulties down the road. So it began to raise interest rates. And similarly, in 2007, 2006, 2007, the Fed was raising interest rates. Interest rate hikes often come right before the bubble bursts. So if that makes you think about 2024 as well, you're
Yeah.
not alone.
Yeah. So, and maybe you're able to pull this all together, but do you think that the creation of the Federal Reserve had any impact on the creation of World War One, ultimately leading to World War Two? And then, the fact that the Federal Reserve was 1913 and, and the Great Depression hits less than 20 years later. Do you think that has anything to do with it?
Well, so the Fed opens its doors, actually goes into operation in 1914. So too young, too recent, much affects economic and monetary conditions during in the run up to or during World War One. The Fed, how should I put it? I do think that when it tried to lean against the bubble on Wall Street at the end of the 1920s, it did contribute to the economic difficulties that followed. When the bubble burst, we had deflation in the United States. That was feared after 2008 and avoided, but it happened after 1929, and the Fed pretty much sat on the sidelines, did nothing to prevent the price level from falling by like a third. So if you were a farmer or a homeowner with a mortgage, and prices and incomes are going down by a third, unemployment is going up to 24%, as it did in 1932, 33, and the central bank is doing nothing about it. Yes, I would say the Fed contributed to economic distress in the 1930s. Did that have anything to do with World War II? That's kind of a long and complicated causal chain. If you want to make that argument, there were financial difficulties and high unemployment in Germany in the 1930s, problems in the rest of the world compounded Germany's difficulties. Some people say that economic grievances had something to do with Hitler's rise to power and therefore had something to do with World War II. But you got to go from the Fed to US difficulties to German difficulties to the rise of Hitler to the advent of World War II. So I think there are kind of too many tenuous links in that logical chain to really make a convincing argument.
Yeah, and I just think that what is it, Newton's law? Every action has a reaction. So the creation of the Fed was so big that it did impact things around the world, whether you can really pinpoint it or not. But who knows? And I just think that there's a big daisy chain there, like you're saying. So definitely it's up for argument, but it's not a clear cut picture. And so to get out of it, the New Deal / war got us out of the Great Depression. Is that right? I mean, maybe there is a remedy, because I think it's important to understand what's the playbook of government. So whenever things do happen, they're going to maybe pull a lever, and therefore you might be able to reap some reward. So what got us out of it?
Well, in Hall of Mirrors and elsewhere, I argue that abandoning the gold standard and then FDR's decision to start buying gold and pushing up the price level made for a more expansionary monetary policy, brought down interest rates, made more investment profitable. So it was more monetary policy than fiscal policy. The New Deal gave us all kinds of policy innovations that most of us value today, like Social Security and unemployment insurance and the first federal minimum wage. But if you ask about its macroeconomic effects, how important was it for getting growth going again and restoring full employment? Answer is less important than the change in monetary policy. So it was really the shift toward a less contractionary and somewhat expansionary monetary policy that put us on the road to recovery. The unemployment rate, however, official unemployment rate had only fallen by 1939, 1940 on the eve of our entry into World War II from 24% to 14%. So that was recovery of a sort. 14% unemployment is a lot better than 24% unemployment. The economy was growing again. But yeah, it took World War II, the combination of the draft and ramping up defense industries to really get us back to full employment.
Mm. Yeah, and then what the benefit after the war, I mean, it was good times for a long time, right? The late 40s and 50s. Then you get into the 60s and we start to have some major issues, but afterwards it was roaring. Let's move forward up until 2000, 2001, the dot-com bubble started to happen. And I don't know how that I mean, obviously there was a crash with the dot-com stocks, but what how did that affect going into 2006, 2007, the real estate market? Was it just that maybe the subprime lending, it was just getting out of control and there was no end in sight and people just got lazy, or what? How are those two incidences connected?
Well, I think even more important than the end of the dot-com bubble was 9/11.
Hmm.
So, September 11th, uh, 2001, a lot of people are worried about a crash and a crisis of confidence. If this can happen, anything can happen. The US is perhaps no longer a safe place to invest. So the Fed brings interest rates way down, perhaps appropriately given the uncertainty caused by 9/11. But then they're slow to bring them back up and normalize rates. So you get a big with free money, very low interest rates. You get a real estate boom and you get something of a stock market boom,
So
both.
they
And
raised or they decreased the rates to such a low level that it just kind of sparked the economy of borrowing, and that did lead to it. That makes a lot of sense.
the other element was, of course, financial deregulation and the ability of the banks to originate and distribute slice and dice subprime securities and derivatives of all sorts. So the mortgages get repackaged and sold on to other investors, and that continues to provide finance for the real estate industry and fuel for the boom.
Mm. And what you're seeing now. So obviously, it's well documented in his book, guys, The Hall of Mirrors, the Great Depression, the Great Recession, and the uses and misuses of history. But you're starting to see, are you starting to see maybe things line up, and you're starting to see history repeat itself in 2023 going into, or 2024, are you starting to notice any type of common ground, if you will?
So I like to use history to find the differences rather than to draw parallels between then and now. The Fed has raised interest rates, as you know, at the fastest rate
In
in
history, right?
living
Is it hit?
memory.
Yeah.
Maybe in Federal Reserve history, I'd have to go back and look at the latter. Um, it certainly it hasn't fueled a real estate bubble. So in commercial real estate, the bottom has fallen out,
Yes.
especially in the Bay Area where I
Yes.
live. In residential real estate, it depends very much on the market you're in, right? But so um, for a while, people were talking about Austin, Texas as in a bubble, and now they're post-bubble. Prices are going down fast. Um, that the stock market has held up as well as it has this time could be a temporary phenomenon in the face of higher interest rates. It could be that mainly what we're seeing is the uh, Magnificent Seven tech stocks, now the Magnificent Four, now that Tesla and others are not performing, Apple is not performing so well. So I think uh, every boom and bust plays out differently, but we've learned that what goes up can come down.
Yeah, I
Just don't
guess.
ask me when.
What's that? Say that again.
Just don't ask me when.
Yeah,
That's
yeah.
the,
You're not
the
a
old.
fortune teller, right? That's the thing. It happens, and you just gotta be ready for it. But it also depends where you're at. Like you said, I guess you said 1929 there was a major issue in Florida, and I think that, Florida is in a major bubble right now, right? Because everybody's moving there, and maybe the housing prices, all that. So it all depends where you live. I live in Pittsburgh, Pennsylvania. I remember in 2008 we didn't feel it as much here, and I think, maybe because it's not a very high traffic destination area, but it depends on where you live. And you say you live in the Bay Area. commercial lending, I mean, the real estate space in commercial is getting crushed right now. So it's being able to manage these big swings. And is there anything you're doing because you understand history to a high degree that you're preparing accordingly? Are you making different decisions whenever it comes to investment or whether it comes to saving? Are you playing the game any differently?
One of my dissertation advisors, James Tobin, won the Nobel Prize in the 1970s for portfolio theory. And they asked him at his press conference, can you explain to the layman uh, what your theory is? And he said, don't put all your eggs in one basket. So I think
It's that
given the
simple.
unpredictable nature of markets and the difficulty of outguessing other investors, diversification is the best strategy. Or the other sound strategy I've learned over the years is to delegate portfolio management to my wife because she doesn't read the financial newspapers every morning and panic.
Oh, I just interviewed somebody last week. He said he manages the top 1%'s portfolios, like the 250 richest families in America. One of the, it's not every rich family, but they're in that top tier percentage. And he says that the smartest move an individual can make is invest like a dead man. I'm like, invest like a dead man. I've never even heard of that. He said, we were able to analyze that individuals who invest and then die actually have the greatest returns because they don't play around. They don't make decisions and move and try to outsmart the market. They just let it sit there for the time to do its thing. And that makes so much sense. But making the right decisions from the get go is crucial. And it sounds like you make your decision and you don't let emotions get to you or your wife. That's it, right?
Yeah, I've learned the hard way not to argue with my wife about finances.
So, when you talk about uses and misuses of history, what do you mean by that? I was curious about how that was explained in the book.
Ben Bernanke, who was Fed chair during the global financial crisis, was a
I
student.
emailed him recently. I asked him, "Hey, do you want to be on the podcast?" And he actually wrote back, "Not right now. I appreciate the offer, though." Ben Bernanke responded to my email. So, yeah, sorry to cut you off there.
He studied the Great Depression as well and took away from that study the lesson that you want to avoid making the mistake of passivity that the Fed made in the 1930s. The central bank needs to act as a lender of last resort into financial markets when financial markets are illiquid and unstable. And it needs to provide more liquidity to the economy when deflation looms as a threat, both during the Great Depression of the 1930s and in Japan, starting in the 1990s. Deflation was allowed to begin, and once it starts, prices are falling, so people stop spending in waiting for prices to fall more, and because they stop spending, prices do fall by more.
Mm.
Deflation becomes a self-fulfilling prophecy and a trap. So you want to avoid going there in the first place. Bernanke learned that lesson from his study of the Great Depression, and the Fed as an institution, all those hundreds of economists who work in the system learned that lesson as well. So we did, in the end, avoid another Great Depression after 2007, 2008. In terms of misuses of history, I've just described to you how history can kind of be a lens through which you can see current problems, but it can also be a set of blinders that leads you to overlook certain problems. So the Great Depression became great because deflation was allowed to cause a banking crisis. Literally, several thousand US banks failed in the early 1930s. Um, the Fed and the other regulators were looking at the banking system in the 2000s to be sure that it was sound and stable, but they didn't realize there was this other thing called the shadow banks, investment banks and hedge funds and others outside the formal banking system that could be a problem as well. So by viewing current events through the lens of that earlier historical episode, they overlooked an important set of threats that in fact materialized.
Hmm. So, what are your thoughts on all of this printing that we just went through and we're going to continue to go through? I just think that that is causing a society to maybe have less belief or less confidence in the dollar. And I just think that it's going to lead to so many problems in the future. Do you see anything on the horizon, or maybe we can look back in history and say, the moment we start printing nonstop to solve every problem, we're in for a rude awakening, whether that's a war or something that could get wild. And there are, I guess, three different leaders from what I found out that went against even using. I mean, we're looking at just looking at trying to the petroleum being the being traded in US dollars, for example. There was only three leaders, I think, that really went against that. One of them was Saddam Hussein, one of them was Gaddafi, and the other one is Putin. And obviously, we saw what happened to the first two, and now it makes sense of why Putin is, public enemy number one because he's doing so much. But now you take that one step further, and you see the BRICS being created, and so United States printing all this money. You have individuals out there having the confidence to start trading petroleum outside of not using US as the currency, the back currency, and you have them creating the BRICS currency. All of it is a recipe for disaster. Especially in the United States, the financial markets are going to just take a major hit. So I think it's a crazy time, and we are in for a bumpy ride. What do you think is on the horizon?
Well, I agree with the bumpy ride problem, but I would frame the rest of those issues a little differently. So I don't think the Fed and money printing are the problem. The Fed has made pretty clear that they're going to bring inflation back down to close to 2%. And I believe them that we're not going to have runaway inflation that undermines confidence in the dollar. I think rather than the Fed and money printing being the problem, the Congress, the executive, and the debt are a potential threat sometime in the future. So if you look at the fiscal arithmetic and the evolution of the debt to GDP ratio, come the 2030s, we're going to have a real problem on current policies. So those policies are going to have to change, and we're going to have to agree on raising more taxes and cutting some spending somewhere. In terms of the BRICS and everybody looking around for an alternative to the dollar as a vehicle for pricing oil and doing cross-border transactions, I think the catalyst there is not money printing or the debt, but it's uh, weaponization of the dollar. In other words, financial sanctions. Um, Countries have seen what the US, our allies, have done in terms of freezing the Bank of Russia's deposits and bonds held in the United States and held by Euroclear in Brussels. And they fear that they could be in the US government's crosshairs themselves in the future. So they want to diversify out of dollars and develop another way of clearing payments among themselves without going through the dollar and US banks. So there is a lot of chatter about that. And there is a very tiny bit of progress there. So China is trying to build an alternative to the New York Interbank Clearinghouse, where a lot of these international payments between banks here and abroad are cleared. And they're trying to build a financial messaging system as an alternative to SWIFT, the Society for Worldwide uh, International Financial Telecommunications, where banks send messages to one another internationally. And it's making slow progress. So the New York Clearinghouse clears 50 times by value the transactions that China's own clearinghouse, it's called the Cross-Border Interbank Payments System, clears. So we're still way ahead. They've got to run very fast for a very long time before they become a serious competitor. And the other thing that countries have tried to do, just clear payments using their own currencies, hasn't worked either. So India and Russia talked for a long time about clearing their trade with one another using rubles and rupee. And Russian companies that export oil to India and earn rupee want to take that money back home, use it for other purposes. But the Indian authorities worry that the exchange rate will weaken if they allow money to flow out. So there are all these disputes that prevent those arrangements from getting off the ground. That's been a long answer, but in a nutshell, it's that countries are worried about weaponization of the dollar. They're exploring alternatives, but they haven't gotten very far, and they're unlikely to get very far anytime soon.
Hmm. If there was one or two great takeaways from the recession in 2007, 2008, what are they? And the only thing I can think of is maybe to touch on what I said before, but where there's blood in the streets, there's opportunity. And I've interviewed many people who became multimillionaires simply because they had cash on hand. The opportunity was right. People were running away. They ran in. They scooped up certain real estate for pennies on the dollar, and then they sold and reaped incredible rewards. So when there is a bubble, when there is chaos, I would think that cash on hand the is the play to have or play to make, and then take action on the opportunities that will pop up if you're ready for them. So, what would you say is the great takeaways?
Well, it was the American financier, early 20th century financier, Bernard Baruch, I think, who said it's dangerous to try to catch a falling knife. Um, so
That's a good analogy. I like
there,
that story.
there
Yeah.
is always an element of that. So is this the right time to buy commercial real estate? You tell me. But there are opportunities out there. But there's also the distinct possibility that certain kinds of commercial real estate, which can't be converted from commercial to residential or whatever, are not going to come back. So I'm not going to advise people about whether and when to try to catch that knife.
Oh, yeah, great way to put it too, because you just never know when it's either falling or when it has stopped falling. And yeah, you're right. Who knows? And so you have it. It's tough to make predictions, but I was always told, and from what I've learned, I just think this entire year is going to be full of chaos. We're dealing with more elections now than any other year in history, right? I believe it's half the world has an election this year. So the fact that it's an election year makes it extra bumpy. But what do you think is coming across our table here in the United States specifically?
Well, in addition to the elections, we have more political polarization here in the US and elsewhere
Yep.
than any time in recent memory, which can mean more volatile shifts in policy. We've got geopolitical flashpoints, multiple such. So I worry about all that, and I think the most worrisome of all are those geopolitics in the Middle East, in the Taiwan Straits, in Russia, Ukraine, uh, possibly in Eastern Europe. There are lots of parts of the world to worry about geopolitically, militarily, as well as economically. And we know that uh, unanticipated blowups of that sort can wreak havoc with financial markets. So that's my number one worry.
Yeah, I mean, it is ripe for a world war, right? You're saying that it seems like things are adding up. It could, hopefully it doesn't, but it's leaning that way when you have like we're Ukraine and Russia and you have Israel and everything you said when it comes to politics here, we're more divided than probably the Civil War, or almost as much as the Civil War. We're not at war yet, but we're very divided now, more so than any time in recent memory. And so it's kind of scary that who knows what's going to happen. And everybody has different views on how to solve this. And they're so different, right? I used to think growing up that Republicans and Democrats were so close that you couldn't really tell a difference. Now it's 100% clear as day. And so it's a scary time, I think, if you're not prepared financially. So is there any advice that you can provide to our listeners after learning this history of, just having your finances in order? That's what this podcast is more so about than anything else. Just taking control of your life and being ready for whatever comes your way. So any advice, any thoughts, anything you're doing specifically that might be beneficial to our listeners?
Well, I talked about diversification before. I should talk about leverage and debt as well. It's institutions, financial institutions, corporations, and households that are highly leveraged, that have a lot of mortgage debt or a lot of consumer debt, or on the corporate side, a lot of corporate debt that get hit hard when revenue streams are interrupted. In 2020, the government, 2020, 2021, our government stepped up big time and papered over those cracks with its various programs, prevented many companies from going bust, and gave homeowners and renters a little bit of help as well. There's no guarantee that the next US government, whatever it is, will do the same. And, there, some point, there will be another crisis of some sort. We don't know whether it's going to be financial, whether it's going to be COVID-like, whether it's going to be geopolitical, but we know that crises happen, and they seem to be coming faster and more furious rather
Yeah.
than the other way around.
Yeah, I mean, I think there's I have a belief there's some malicious intent. Obviously, there's some individuals maybe pulling the strings that they want them to come more and more and more frequent. So yeah, I just think that now's the time to take control of your finances. I did want to ask you about crypto. There's people out there who truly believe that that's the future. And I just had a guest right before this podcast episode talking about the blockchain. And are you doing anything? Are you studying it? Do you believe it's going to be a major factor in the next 5, 10 years? The blockchain, crypto, alternative currencies, if you will.
Yeah, I do study it and get asked about a lot because I'm a student of the 19th and early 20th century gold standard, and there are parallels that people think between the gold standard and crypto. Take money out of the hands of government would be one parallel people cite. I like to distinguish three kinds of digital currencies and argue that only one of them has legs. So there's plain vanilla crypto, Bitcoin, and the like,
Hmm.
which I think is a speculative asset with no intrinsic value, and it's not going to last
Bitcoin
forever.
will not last. That's what you're believing?
That's my belief. Number two are stable coins like Tether and the others, which are pegged one to something, typically the US dollar. And I don't think those are going to last either, because if they're only partially collateralized, only partially backed by US Treasury bills, they're subject to bank run like problems. And if they're fully or over collateralized, they won't scale. I have to give you more than one US dollar to get a dollar's worth of token from Tether or whomever. That's not a good deal for me unless I'm a money launderer or engaged in some other illicit activity. So the third variant, central bank digital currencies, I think those are probably going to happen. And central banks are going to be using a technology, maybe not blockchain, but a ledger of some kind, permissioned, unpermissioned. They haven't decided. Is it going to be a currency that they distribute only to banks and other designated dealers who turn around and give you a digital wallet? Or are you going to have a digital wallet with the Fed? They don't know. But I think central bank digital currencies are coming, and stable coins, on the other hand, plain vanilla crypto, on the other hand, are not going to last.
Now, I see what you're saying. Do you think it's a good thing or a bad thing? I mean, I'm with you. Do you think the Federal Reserve, do you think central banks are going to say, let's not get involved in this crypto? I believe it's coming. Now, do you think that's a good thing or a bad thing for society?
Well, I think we always have financial innovation and that we should take advantage of the availability of um, digital ledgers, being able to um, enhance financial inclusion, uh, uh, give people alternatives to paying 1.5 or 2% to their credit card company every time they want to swipe
Right.
a card at their local coffee shop. And the central bank may be able to provide payment services and other things for less. And if it can, in a secure way, that'll be good for all concerned.
Mm. Yeah, I think it's a scary time, and I can only see that it's going to look more and more like China with the social credit system, right? The moment that the central banks have pretty much access to everything at all times, you could be shut off if you don't play by their rules. Do you see any of
Well,
that coming down the road? Do you fear that at all?
if I was Chinese, I would fear it. But the People's Bank of China, the central bank there, has um, repeatedly asserted that they will not be able to see the individual transactions of people using their central bank digital currency. They'll know the who and the where, but not the what
Hmm.
you're buying, in other words. And the Fed, whenever it talks about this, I was at a meeting with Michael Barr, who's the member of the Federal Reserve Board who thinks about finance. He's the vice chair for financial stuff. And he was very strong on the point that if we, the Fed, do a central bank digital currency, your transactions will be private and we will not be permitted to see them. So I know that not everybody, that not everybody in the Congress believes everything the Fed says, and that they don't believe this
Yeah,
in
of course.
particular, but I believe them when they say it.
Oh, so yeah, I can't in good faith believe everything they're saying, right? Because who knows? Obviously, credit card companies, they're able to track everything you're purchasing. So, I mean, it's just everything is gonna be transparent and you're gonna be able to see pretty much anything you want. And they're probably already able to do it right now. They just can't really shut off everything. I mean, it's still a cash driven society, maybe not it will soon to be cashless. Maybe not in our lifetime, but it will be someday, which really does scare me. Anyways,
Well, the last point, I would say that the Fed is not going to be able to see it or shut it down. But the big danger with digital dollar is that a bad actor could shut it down.
yes.
Digital system can be hacked. We've learned that repeatedly. And if the only way to buy a coffee or anything else is to use a digital currency, somebody interfering with the operation of that system, that would be equivalent to interfering with the electricity grid. Bad things happen when hackers get their way.
Yeah. It could get scary. That's why, multiple revenue streams, maybe having multiple currencies, doing everything in your power to just keep control as much as possible. It's my philosophy and think like an entrepreneur. I always say that over and over and just start to be as prepared as possible. But it looks like you're very well read. So my last question to you is there a book on that shelf or in your life that really stands out as a defining moment? I always bring up this book, Rich Dad Poor Dad, for a reason. It's the book that set me free, gave me an idea of how to grow wealth. And so I owe that book quite a bit. Is there any book in your life that did that for you?
There is, and it's going to surprise you when I tell you. Um, there was a famous entrepreneur who mainly made his name owning baseball teams and innovating in how he managed them and ran them. His name was Bill Veeck, Veeck. The book is called Veeck, as in wreck, and it's his story about how he was the first person to do entertainment in baseball stadiums. He was the first person to set off fireworks after games, to have
No
he
way.
was
I
the first one
love
to have a
it.
mascot. He sent a midget up to bat. He did amazing things to get people into the stands. He owned the Chicago Cubs for a while, the White Sox for a while. He threatened during World War II, when the color bar was still on, to hire all the best African American baseball players away from the Negro Leagues. During World War II, nobody could have stopped him because a racial blowup would have been the worst thing for the war effort. That's how the major leagues got integrated with Jackie Robinson and all that after World War II. So he did a lot of innovative financial things and a lot of other really interesting departures from what people thought was the norm. So,
Man.
and the book is really fun too.
So his name, it's called Vec, and his last name is Vec. Is that right?
It's called Beck as in wreck.
Yeah, got it. Wow, it sounds like he kind of was a showman, almost like a Barnum and Bailey's, and was put together a great show, and also was an entertainer at heart, and that's phenomenal. So,
When he got locked out of baseball, he ran a circus for a while.
of course, when you have the mindset, it's very much like Vince McMahon. They always said was sort of like the carnival guy of the of 2000s, right? So, yeah, when you have that mindset, you can reap rewards and just entertain people. Incredible. Anyways, is there a website or a social media channel that people can find you on and get in touch with you?
Yeah, I'm still on Twitter, despite all the stuff there. So
All
uh,
right, I like that.
whenever I
I'm on
have
X.
something coming out or I'm doing an event, I use Twitter to promote it. I think I'm B_Eichengreen at Twitter.
Got it. Excellent. Well, I appreciate your time. Very well thought out answers. You know your stuff. And yeah, some great takeaways, and if you have a wife out there, just give your money to your wife, is what you basically said. Is that right? Just that's all you got to do.
Yeah, closing thought.
Guys, the book is called Hall of Mirrors, The Great Depression, The Great Recession, and the Uses and Misuses of History. Look him up on X. Barry Eichengreen, thank you so much, sir.
Thank you, Mike.
Remember, guys, $1 million book will lead to $1 million life. Right on.